Hi, everybody. We're here with another segment of JAG University. I'm here with Fernando Alvarez, one of the principals of our firm. Thank you for joining us today, Fernie.
Thank you for having me on, KG.
Yeah, absolutely. Today we're going to talk about physical damage and liability coverages on commercial auto and what the differences are.
Nice. So I'll read this to make this as simple as I can and as fundamental as I can. Your commercial auto policy provides physical damage covered for vehicles you own, lease, hire, or use in your business, and liability coverage for bodily injury and property damage caused to others by your use of the insured business vehicle. So commercial auto is providing coverage for third-party negligence liability, right? And it's also providing coverage for the actual physical damage of the vehicle that you own, lease, or hire. So that is the fundamental definition of commercial auto insurance.
Got it. Yeah. So really it's physical damage, vehicles in your possession, and when they get damaged, and then the liability would just be for third parties. Essentially, you're getting sued.
Correct.
So, and then, when we're working with our commercial auto clients, especially some of the bigger ones, what are some items when we're looking at loss history or things like that raise the bigger red flags? Do you think, more of a history on the physical damage side, or liability issues are more concerning?
I think liability issues are more concerning, specifically living in such a litigious state like Florida and South Florida, where there's a lot of liability frequency losses in South Florida, specifically in Miami, Florida, and I would dare to say Palm Beach and Broward. So I think underwriters are looking at, from a loss history perspective, they're looking at what your liability losses look like. Now, one of the things that we do here with our risk management department is we really try to, once we've got your loss history, your five-year loss history, our in-house risk managers try to identify frequencies. So are there any frequencies? Is it mostly accidents caused because yielding into the wrong lane? Are there issues because you're texting and driving? Are there issues with hitting people from behind?
Yeah.
So we're always trying to identify patterns, and then in some instances we've seen even where, I'll give you an example. We have insureds that are driving concrete mixed in use, right? So dump trucks and concrete mixed in transit, and a lot of times we've identified that accidents take place in a certain road in a certain mile radius. So we identify that and start finding out why. Another thing that we've realized is many of the commercial auto drivers that are out there are driving under a lot of stress. They're trying to get somewhere. They're trying to be somewhere on time. So, it goes as far as who's dispatching these drivers, when are they being dispatched, under what type of stress, at what hours. So there's a whole lot of things that we can identify to help minimize losses and maximize profitability. But it just takes data and intel to really identify where your liability cases are.
Yeah, so it really sounds like it's the quality of information that we can get determines how we can turn it around to a carrier and demonstrate kind of, if they've had the losses in the past, what they can do and what we are helping them do to improve it, get rid of it. And you raised an interesting point, because when you talked about the liability, some of the claim drivers there, you mentioned like three entirely different scenarios. One, you had routes where the truck drivers are taking and how the dispatch is working. So
Correct.
That's the internal company protocols. Then you also mentioned you have drivers, and it's maybe you have problematic drivers that have bad habits like texting. Maybe they're not following the safety protocols in place. They're texting when driving, or they're rushing, or maybe they're not, adhering to other types of safety procedures that they have. And then, so it's interesting because it looks like liability is something where you can really enact procedures in order to minimize those losses and communicate to companies, hey, look, we've had these trends, and this is how our risk management team has helped them mitigate the trends.
No doubt. And one of the things that whenever you have a commercial auto fleet and you have a large amount of exposure on the road, rubber on the road, one of the things that we've identified and realized that we've had great solutions with is, you have to have a culture within your organization that buys into driver behavior. It's got to be something that's incentivized for drivers. There has to be safety meetings taking place, just reminding drivers of making sure that they're, stuff as fundamental as, a checklist,
Yeah.
Are my tires in order? Am I cleaning my truck after I've, poured cement somewhere? Keeping my miles, just the fundamental stuff of keeping your car intact, and at the same time also adopting driver safety behavior, where your end game is to complete whatever you execute your route, deliver your goods, but you also want to come back home.
Yeah.
And it really comes into companies and organizations buying into driver behavior, and that's a real term that's out there. It's how do we get our folks to really understand that, hey, we want you guys to work hard, but we also want you guys to be safe. We want to be safe, and when you get companies to buy into that and pour even money into risk management, they start to see the returns immediately. So.
Yeah. And it's interesting too, because here we're doing a segment, we're talking about physical damage and liability, and the focus is almost entirely on liability.
Yeah, because liability is the unknown, right? Yeah. And liability losses are what drives insurance rates. So if you want to be able to have leverage in the marketplace, well, you create leverage by having a better credit history.
Yeah.
Right? I find that's like going to the bank and asking for a loan. If you have a higher credit score, they're probably going to give you a better terms and conditions and a better rate. And it's the same concept with insurance, keeping your credit history and your loss history as clean as possible. And that all starts with mindset and culture and behavior. So I focus a lot. I tend to drift more towards liability. From a physical damage aspect, it's like buying property insurance, right? It's all about the total insurable value. The year of that car or that dump truck or long hauler, whatever it may be, and is it being kept is it being mitigated? So that's what drives physical damage, is really the total insurable value and really what the exposure is. So that's just, I don't want to call it construction characteristics, but the characteristics of the vehicle are what drive that. But I would say that the main focus and concentration is, how do we keep liability losses down? And you do that by implementing, and I'm going to say the same thing over and over and over again, because this is how you do it.
Yeah.
You have to have a culture that buys into safety. You have to have a culture that operates with safety being the first priority, not delivering the good on time. And if you do that, the results will also be there. You will deliver on time because you're going to be on time. You're going to be dispatched on time. You're going to know what road to take. You're not going to be in a rush. You're not going to text and drive. You're going to take all the proper channels that allow you to be, for you and your company to be successful. So.
Yeah, and it crosses so many boundaries, right? Because if you're focusing on that, it helps your liability a lot, because the market's pretty consolidated. Not a lot of companies are out there that'll be competitive. But you're also going to help your workers' comp experience, which
Absolutely,
is a
that's a
major
great
cost
point.
driver as well. And also your company's probably going to function with a better reputation. You'll probably hire better talent. You'll probably be able to get better customers just because you have that reputation of you have a good safety culture, you don't get into a lot of accidents, and then maybe even being able to qualify for certain contracts because you can afford the limits that are required or the forms that are required.
Excellent point. You and I have talked about the excess market being a very challenging market out there. Well, it's more challenging for those who have a loss history that's proven not to be very successful.
Yeah.
But if you have an underwriter who's looking at your data and saying, you know what, this is a good insured, this is somebody who I want to partner with, right?
Yeah.
I'm going to assume some of the risk. Then that's how you create leverage in the marketplace. One of the things that I've caught myself saying lately, and I don't know if my clients have taken it the wrong way, but I mean it from the bottom of my heart, is I tell them, I encourage them to operate as if they didn't have insurance.
Yeah.
Right? So if you got in a car today, didn't have insurance, you're probably going to drive safer. You're going to be more aware. You're not going to take unnecessary risk.
Mm-hmm.
You're going to be more alert and hyper focused on what you're doing.
Yeah.
And that's the mindset that I try to instill in our clients is, operate as if you didn't have this. It's there, but let's try to make pretend that we don't have. Let's try not to use this product as much as we can, because look, at the end of the day, insurance is affecting a company's balance sheet, right?
Yeah.
They want to keep that cost down so they're more profitable, right? But you need insurance in America, right? If you have a car, you got to have insurance. So how do we do that? I go back to the same thing. It's probably a boring JAG right now. I'm going to say it again. You have to implement safety and driver behavior. Now, driver behavior is implemented by the leaders of that organization, by them communicating with these drivers that, hey, at this corporation, at this company, your safety is our number one objective, right? And if we can get you home, we're happy. And if we don't get other people injured, we're happy. And that's got to be, it's a pretty fundamental conversation, but for whatever reason, I think companies sometimes don't implement that. Maybe it's not top priority until, I always say, insurance is the last thing looked at sometimes until bad things happen.
Yeah, and then all of a sudden it's so important.
And all of a sudden everybody's running to their deck page, right?
Yeah.
What am I covered for?
Exactly.
And I think smart organizations understand that risk management is a necessary, especially in the world that we're living in today.
Yeah, and it makes our job so much easier when that culture exists and we have to pitch a client to a carrier. And what you mentioned about operating as if you don't have insurance, right? Because if you have 100 trucks on the road, stuff's going to happen.
No doubt. And underwriters know that, and they have a fiduciary responsibility to be to have the infrastructure to support that.
Exactly.
But with that being said, you should control what you can control,
exactly.
Right?
Yeah.
And the controllables are your mindset as a driver, the culture of your company, buying into that mindset,
yeah,
and having the safety protocol and the risk management guidelines that allow you, the playbook we'll call it, that allow you to be successful.
Exactly. And then when those events that eventually will happen do happen, we're not pairing that up with frequency and bad trends in driver behavior, company behavior as well. So, if we have a good loss history that shows a company that values risk management, that values safety with low frequency in claims, with not trends or anything like that, and then boom, maybe you have a high severity loss, a big shock loss. If the rest of the loss history looks clean and we have good management on the risk side, the carrier is going to see that and kind of be like, hey, you know what? Things do happen. That's just the way it is. But if they see the shock loss and that's also paired with a lot of frequency and claims that show bad risk management, that's like the biggest red flag an account can have.
No doubt. And now you've eliminated carriers that want to write your business, so the price is only getting more expensive.
Yeah. So it's like keep that loss history clean, only for the unforeseen events, blue moon stuff, but anything that can be prevented, you should really work to prevent every day within your culture.
No doubt. And I'll end it with this. Implement. It's got to be cultural. It's got to be real. It can't be just talked about. It should be incentivized for drivers. There's a lot of ways that you can incentivize a driver to do things the right way. And if you do that, you're going to minimize losses. You're going to maximize profitability. You're going to have more insurance companies that want to insure you. And you're going to have darn much better pricing.
Perfect.
Thank you, Kevin.
That's a great ending.
Thank you for
Fernie.
having me on.
Thank you for tuning in. JAG University, Physical Damage, Auto Liability, here with Fernie Alvarez.
Thank you.